Well, good afternoon, folks. Hey, it is Shooter Scott Henderson. And of course, we're going to take a look at some technical analysis, Elliott waves, and some other indicators. Specifically for this video, we're going to focus on TLT. Of course, at the end of our presentation, please do review our disclosure. So let's jump right into this. Okay, so we are looking at a weekly chart of TLT in motive wave. And structurally, the reason this has changed is because originally this was an ABC corrective pattern and it is morphed into an impulse. Originally, our ABC pattern would have been right around 106. It became extended at 91.85, then our back test. Once we rejected here, we still could have held, but I don't think we should have come below about 86 as far as an elongated leg. However, it could head lower, and we've just been building, we've just had this slow trickle down. So once we did not get back above, and actually this last week was when our technicals changed. So once we did not get back above this 100 and hold, that is where our count broke down and went to an impulse leg down. So we are in wave 5 of an impulse leg to the downside versus a corrective leg, ABC pattern. So it is a bearish impulse leg to the downside. Now what I've done is I've plugged all of this data in. Let me go and find. Okay, now we are looking at a TLT chart in TradingView. And, this is my projection of, the buy zone of where we were. And that was until I got motive wave reloaded. And, I went and ran through my technical tools there and I have a different opinion. So what I've done is I've taken all of these charts and moved them into our AI engine. And, basically I did all the time frames, harmonic patterns, etc. And then I basically asked it all the questions, used my prompts that I used to generate the responses. And, here's what we came back with: a pathway to higher levels. So in short, the key drivers are Fed policy, clear signal of rate cuts, which we don't have. Okay, is bullish, TLT. Clear signal we're bearish is a hawkish approach. Disinflation versus sticky inflation. So sticky inflation, TLT is going to continue lower. China's stimulus rate policy might indirectly support liquidity flows. A credit market stress would drive TLT higher. So a liquidity crisis, etc., is there. So what do we have here? We have a semi-bullish stance from the Fed, but I think they're going to cut again. So that's why I think we chop around in this range. That's one reason that flat is where we are. I think it's potentially $86 on TLT from that. But once the rate cuts stop, because I think they are going to stop. I don't think we get another 100 basis. I might be wrong, but that's my thought here. So I'm looking at this. Are we going to get a hawkish stand flip towards higher inflation? That I don't know yet. But I don't see rapid disinflation coming. Now, however, I do see that in China. I think China is, going to continue to dump into the market. How much that really is going to affect us with how much the supply chains have shipped at this point. But what needs to change for a bullish reversal? We need a confirmed dovish pivot, which we've had, but it's waning. Signs of declining treasury yields, which as long as the U.S. debt is as high as it is, I don't think that wins. I think we continue to warrant higher yields because the risk factor in there. A volume spike on upward breakout above $100 sort of confirms buying interest. So we got to get $20 back up, $15-20 higher than where we are now for that reversal to come out. So the odds of a 73 are moderate. I would like to have heard that's weaker. We could find some support around $83. The odds of 55 is lower. We need a market catalyst, a shock, runaway inflation, liquidity crisis, something to push us down to that 55. So let's go back to my chart. So just rehearsing what I saw and why I see it differently now. So originally this was an ABC pattern, and technically it's really not filled yet. So, equality, the way that I look at it, was here, or really about here. So we've extended a little bit, bounced above 50%. So this is really where we needed to get above that 109 to hold to the upside. So elongated is where we are. What gives me my bearish bias is this flat that we've broken below the flat. So, our prior low on our C at that 87.19 is what we broke below. We're now testing it again. So as long as we stay below this, we need to get back up above this 94.84 for me to get any bullish bias back on the table from these lows. I think our most likely target is at 73, but this is a pretty structured motive wave at this point, impulse leg down. We had our confirmed low in RSI right here. We have our divergent low. So I'm viewing this as if it becomes a 3 drive. Right now, the wave pattern is recognizing it as an ABC pattern, but at some point that's going to become invalidated. And honestly, it's invalidated for me technically because we did not hold this 157 level. We got just above it, so we overshot it, got a little price rejection, nothing aggressive. So I think our most likely target is back down towards that 73 to 71 range for our 3 drive. I'm going to end with this, folks. That's what this video was about. Great trading. Until next time.